So if I had to start over in multifamily real estate for 2026, knowing what I know now after doing this literally for the last 48 years, here's exactly what I'd do. I've seen the market go through big booms, huge crashes, and literally everything in between. And you know, while the headlines change over time, the fundamentals really never do for real estate. So in this video, I'm going to walk you through how I'd rebuild from zero, literally step by step, the exact things I'd focus on, what I'd avoid completely, and how I'd position myself to build long-term wealth no matter what happens with the market. The first pillar is you've got to build your foundation. What I mean is you have to learn how to underwrite deals. You have to understand some of the different nomenclature, some of the different verbiage, like what is NOI, net operating income. You have to understand what a cap rate is and how it's used, you know, and what the debt service coverage ratio is, DSCR. Maybe you've heard of DSCR loans. And then really what the returns are. So like cash on cash return. In underwriting deals, probably the most important thing is the NOI. That's the net operating income. So that's all the income from every source on the property, less property-related expenses equals the NOI. It does not include the debt. So that's the NOI. Then you've got the cap rate. So the cap rate is how properties are valued, and it was put in place so that investors could value different asset classes. So apartments versus shopping centers versus, you know, office, all of that. So that's why cap rates were put into place. And to arrive at a value, you divide the NOI by the cap rate, okay? And you come up with the value. Okay, so so that's the cap rate. Now then there's the debt, there's the DSCR, which is the debt service coverage ratio, okay? When you're buying a commercial property, they're not looking at your debt to income. They're looking at the property's ability to service the debt. And it's typically an annual calculation. So let's say you've got income for the year of $125,000 on the property, okay? So over 12 months, you're making $125 net NOI, net operating income. And your debt is $100,000. That equals a 1.25% debt service coverage ratio, which is what most banks want to see. So that's the debt service coverage ratio, okay? Then let's talk about returns now. So there's a cash on cash return, cash on cash, and that's the one I like the most. That's the one I pay the most attention to. And basically what that is how much money, your money that you put into the deal out of Hip National Bank, how much that brings you every year. So let's say you put in $100K and you get $10,000 a year. That's a 10% cash on cash return, which is a great return. Okay, so you need to know that. Okay, now let's talk about market selection, okay? Whenever we look at a market, I want to see three things growing: income, population, and jobs. What do you think is the most important one? Jobs, okay? I want to see people moving in. I want to see lots of employment industry diversity, okay? So I want to see job growth. I want to see people moving in. I want to work in landlord-friendly states, which is the red states. Life's too short to be dealing with, you know, rent controls, and where there's some states where it can take a year to get, like New York, it takes a year to get a tenant out. You can't afford to deal with that. So I wouldn't deal with it. You know, focus on income and jobs and population growing, jobs being the number one. Focus on landlord-friendly states. And that's the next piece. But then you've got to pick one market. Now, I'm going to suggest 4 markets to consider first, okay? The first would be your backyard. I mean, hello. I mean, now I consider your backyard anywhere within like 2-hour drive. So like I live in Sarasota. For me, that'd be Orlando, Naples, even north of Tampa. So backyard. The second one would be a place where you grew up or spent time. Okay, that'd be number 2. Okay, the third place would be a place where you have boots on the ground. Okay, you've got family or friends there. Or, you know, like if you're in my warrior coaching program, we've got literally people all over the country, and some people act as boots on the ground. Okay, and then the fourth would be a place you like to visit or might even want to retire. So make sure when you pick a market, it's one of these 4 to begin with, okay? So that's on the markets. You got to pick a market. Then you also got to pick an asset type to focus on, okay? So what do I mean by that? You know, there's multifamily. My students now own well over 265,000 units in multifamily under my tutelage, something I'm very proud of. But there's also a ton of senior housing. There's a ton of student housing. There's a ton of self-storage. There's mobile home parks. Every asset class you can think of is represented in my program, but you've got to pick one, okay? So you pick an asset type to focus on. Don't try to be a generalist. Be a specialist. That's super important. And then you got to spend time analyzing deals, right? Are you going to be great at this the first time you look at a deal? No. But you've got to spend time doing this because repetition is the mother of skill. So look at freaking deals every day. Be looking at deals. You'll get to where you can smell if a deal's a good deal. And if you're focused on one area, you're focused on one asset type, you're going to become very good there. So I would suggest you spend 30 to 60 minutes a day analyzing deals. You can pull deals from Crexi, you can pull them from LoopNet, but just start pulling them and practicing your underwriting. So that's pillar one. So pillar two is you got to build relationships so that you can raise capital. Yes, these deals take money, but it doesn't have to be your own money. There's so much money looking for a home right now that, my students have raised hundreds of millions, so have I, and you can raise the money for these deals. It doesn't require your income. It doesn't require your credit. It doesn't require your money. You can raise the money. So how do you build credibility before you start asking for money? Well, I would suggest you start attending local meetups, okay? There's online multifamily communities. I host the largest Facebook group for multifamily really on the planet. You can look that one up, but you want to connect with brokers, property managers, lenders, other investors. So that's what you start connecting with these people. Now, here's the key though. You want to add value, okay? The people in this country that are the most successful add the most value. So, whether you're helping analyze deals with other investors, maybe you're sharing insights, you're assisting other operators, you're connecting. Again, this is why my program, like my coaching program, is so successful because everybody's doing deals together. But you can do this in your backyard, go to your local meetup groups, but share ideas and talk shop, and then, maybe focus on forming a small circle of serious investors and partners and see how you can add value to them. Set a goal to meet 5 new professionals in your market this month and every month, and start capturing information on that market that you're investing in and sharing it with these people, adding value to them. So the next pillar, number 3, is find your first freaking deal, okay? Now I'm going to tell you, don't be a perfectionist. Momentum will beat perfection every day of the week, okay? You've got to take action. So take action on a small, realistic property so you can gain experience. I call it the law of the first deal. I see it with my warriors, my coaching students all the time. They're like, it's like 4 months or 6 months, and I'm kicking them in the butt. Keep going. You're going to get some. They get one. And the next thing I know, they have 3. I'm like, what the hell just happened? Okay. It's that law of the first deal. So you got to get that first deal going. So maybe you target a 5 to 20 unit property. It doesn't need a lot of work. We call it a light value add property. I would suggest you look for a B or C asset in an A or B area. Okay. And you want to ideally, if it's a C property in a B area, you want to clean it up and bring it up a class. If it's a B property in an A area, you want to clean it up and bring it up a class. That's what we do, okay? So again, I look for B and C properties in A and B areas, okay? Where there's consistent rental demand, of course. Now, ideally, you partner with someone experienced for your first deal. That's how everybody does this. So when they go approach sellers and they go approach brokers and lenders and investors, if you've partnered with somebody that's got some doors, you can say, we own 300 doors or 500 doors or 1,000 doors. So get around people that are doing this. Again, another benefit of a group like mine. I'm not trying to sell you on mine, but out of these 265 or 6, I think it's probably closer to 300,000 units. We've lost track on the count in multifamily. 98% of them are done between warriors. And so because this business is a team sport, so you got to get around people that are doing this, okay? Now, your first deal will teach you the process. It's not just going to make you profit, it's going to teach you the process. So here's what you want to do. Underwrite, 20 deals, submit a couple of offers, and you learn through doing. So pillar 4 is raising capital the right way, okay? And basically, it's based on trust, okay? And so what you're going to do is you're going to build systems and develop confidence so that you attract investors long term. So one of the ways to do that is you could document your journey as you're learning, document what you're doing, looking at properties, evaluating deals, do videos on it, and that shows credibility. You can do it social media posts, you can do emails, you can do a podcast. In my Warrior program, there's dozens of podcasts, a couple of them award-winning. So you could do all of that to create reach. You can create a one-page investor deck, for example, who you are, your focus, your plan, and ideally align with someone that's already done this. So you can use the we word, okay? And you can say, we've got a few hundred doors. We're looking for more deals. If we find a deal, would you be interested in investing? Okay? Don't ask for money right away. What you do is you present opportunities that solve problems for others, because there's, so many people out there that have their money in the stock market. And so again, you're presenting opportunities. You're not begging them for money. They're asking you how they can participate in your opportunity. That's the mindset you want to have. And so, the problem you're going to solve for them is they have no place to put their money that's safe. Stock market is so freaking volatile, it's crazy. So, real estate is a safe, secure investment they can put their money in. Now, you're also going to need to learn the basics of joint venture and syndication, because that's how you're going to raise the money. And I don't want you to be intimidated by either one of these things, okay? Joint venture. So what's a joint venture? A joint venture is when everybody participates in the deal, okay? So, everybody's active in the deal. I've done millions of dollars worth of joint ventures when I was very young, in my 20s, doing houses, actually. They were joint ventures for houses. My partners put up the money. My partners signed on the debt. And they also played a role in how much money we could spend to fix the property up. So they were very active, and we did 50-50, split the properties. Everybody's happy. That's a joint venture when everyone is active. Now, if you take money from someone and just offer them a return, you have to do a syndication, okay? Now, I don't want you to be intimidated by this. You use an attorney to do this. Yeah, you're going to stroke a check, typically around 15 grand and you're not going to do a syndication unless it's typically at least over $1 million, if not even a little more than that. But syndication is where you pool money together. You can be the operator, the person that puts it together, and again, this is how my students have bought hundreds of thousands of units, and every other asset class as well is doing syndications like this and pooling money together, very often without any of their own money. And so that's what's so exciting about this. You raise the money when you're credible and congruent, when you're communicating with potential investors, they'll give you money to invest. And so, I would suggest you start working on building your investor presentation. This is one of the things we have our warriors do, is do an area presentation. So whatever market you're going to invest in, do a presentation showing why we like, for example, San Antonio. Well, they're putting $4 billion into the airport. Population there keeps growing. There's tons of Fortune 500 companies that have their headquarters there. All these things. You do a presentation, present all that stuff, and then once you have a property, you plug it in. You're off to the races. You're ready to go. So get your area presentation done, and then then you're ready to go raise money. But again, back to raising money, I would suggest that you add value, okay? Value is the most important thing. So how do you do that? When you're talking to investors, get their email, send them information, educate them. It's called education-based marketing, and that's how everybody does it. And that's what I'm doing right now. This is education-based marketing. What I'm doing with you right now, I'm adding value to you. Hopefully, if you're ready to take this to the next level, you'll look at what we do. So that's what I'm doing here. So pillar number 5 is scaling, and scaling with systems. And every business is nothing but people and systems. Okay, so you've got to build a structure and repeatable systems so that you can scale long term. That's how it's done, right? So, ultimately you're going to hire or outsource your property management. Okay, once you get to stabilize your property, you're going to create SOPs for deal sourcing, operating procedures for deal sourcing and updating investors. Like I send an email to my investors every single week, updating them, letting them know what's going on in the country and geographically specific. You're going to have SOPs for oversight of the property, really, and KPIs, key performance indicators. What's happening with the income? What does the delinquency look like? Do we have renewals coming up we need to be working on? How long's the maintenance taking? What's the occupancy look like? And on and on. These are key performance indicators you're going to be tracking, if not weekly, definitely monthly, okay? And then a system to reinvest your profits into larger assets and then be more efficient with your systems. And it just goes on like that. So I would recommend that maybe as a practice, you document and delegate one recurring process this month, what you need to do as you scale this thing. So those are the 5 pillars to get rocking right away. That's exactly how I'd start over in multifamily real estate in 2026. Simple, clear, this is proven, okay? Over thousands of students that I've had. Now, if you want hands-on help doing this, that's exactly what my program is designed for. You know, my community is called the Warriors. They're my Warriors. Collectively, they now own somewhere between 267 or 68,000 and 300,000 units in multifamily. They own tons of senior housing, tons of mobile home parks, tons of self-storage, tons of industrial flex space, you name it, all of it. And they work together, they do these things, and you know, rising tide lifts all ships, and that's how it is. You know, you want to be around people that think what you think is hard is easy. Now, inside this program, we teach you everything you need to know from A to Z, how to find deals, how to pick your market, how to put a team together, you know, how to find those deals, how to evaluate those deals and underwrite them, how to raise all the money you need for your deals, how to finance them with lenders that we recommend and loan brokers we recommend, how to syndicate, how to joint venture, how to property manage, and basically how to build incredible wealth with multifamily, with full coaching and checklists and reports and everything else, accountability. Make sure you're doing it. If you need a kick in the butt, we'll be there to kick you in the butt. And that's our Warrior program. If you'd like to apply to our Warrior program, click the link in the description and set up a call with my massive action team. And I can promise you, you will leave that call better than you got on it. So click on the link and we'll talk soon.